Good morning, ladies and gentlemen. I think we touched on some of the financing aspects by Monita asking some questions about the financial sector growth is largely driven in Sri Lanka by FDIs. So I think we will get into a little bit of deep questioning about where the financing is coming for our hotel sector and what are the challenges, because I feel we see more room for the local financing or depth in the financing of hotel sectors from the local funding associations. So without further ado, I welcome Jonathan.
Thank you.
And I think one thing we have seen is the financial sector as a whole, our banking sector, is not kind of lending as much as they lend to infrastructure and agriculture and so on to the hotel and leisure sector. I think it's about 4%, if I'm not badly mistaken, the maximum that the whole banking sector is lending to this sector. Why is that?
Good morning, everyone. Can I be heard? I dropped half of what I had to bring, so in case I can be heard, firstly, it's good to be here. So thank you to the organizers for having me. Like to see so many faces as well. I hope by the end of today, you'll make your decision to come to this beautiful country, invest in Sri Lanka. I believe the timing is good. I believe the location is good. I believe the product is outstanding. And in there, HNB and the entire banking sector looks to support you, your endeavors in promoting tourism in Sri Lanka. So to address Ravi's query, the banking industry lending just 4%, while that might be true for the banking industry, I want to maybe say at the outset that's not true for the bank that I represent, which is the Hatton National Bank. We have lent almost 10% to the tourism industry, and that's about almost at cap. In general, we have a concentration risk of around 10%. Spread across trading, manufacturing, construction, agriculture, dairy, and various other industries, with tourism being a very important industry, like I said before, touching the 10%. In terms of a cap, the cap is at around 100% of core capital, which is quite significant, which then tends to work towards the 10% that I just mentioned in terms of total assets. So then why, if at all, has been the penetration been relatively lower in the tourism industry? The typical basic stuff would be that banks, ladies and gentlemen, get their funds, get their sources very short term. What we have are savings accounts, and the time deposits that we have are predominantly one-year deposits. It's not that easy to keep attracting 3 years and 5-year deposits in a market where interest rates are a bit volatile. So people, investors don't want to hedge themselves for such long period. So that being the case, you're working off a very short tenor liability base. Now think about the investment that needs to go into the tourism sector. Typically, the loans that we have been funding are in the range of ideally 8 years, but then sometimes stretching even to a 10-year period. That follows something like a 2 to 3 year grace period, plus another 5 to 6 years in terms of repayment. So you need to lock in your funds for a long time, as opposed to being able to churn your money in short-term working capital facilities bearing in mind that your liability base is shorter tenor. To add to this, you also have that some of the experiences we have had historically has not been as good as what we have today. So we have had poor locations being selected. We have had difficulties in recovery due to cost overruns, time overruns, project sponsors not being as committed as they should be, operators going in for very high cost structures which were not sustainable in terms of bringing in the required revenues to hit the paybacks, because it's nice and fancy to have the best product, but it's sometimes you need to also bring in realism in terms of what is attractive to Sri Lanka, in terms of people are coming mainly here to see the beautiful country, to see its locations, the hills, the beaches, the culture, the sport, the diversity that it brings in, and they don't necessarily, tomorrow want to come to a $10,000 property like you would get in our neighbors in Mali or whatever, but you need to have something like a realistic cost structure. So you take that too high, you somehow, the operator gets away with his management fee, but the promoter or the project sponsor is really down, and when he goes down, the bank also goes down. So the NPLs had not done too well historically, but I must tell you that these days it's doing much better, and the appetite in the banking sector is much more positive than it was ever before, and not just in the corporate and in the international sector, but also in the SME front. We increasingly want to put money into the SME small boutique hotels into various parts of Sri Lanka, and we see some good traction there and want to continue to do that business. I must say our preference with our international friends would be to attract as much FDI as possible and then limit our exposure in terms of the funding. We would not hesitate to fund you on the working capital requirements, on the day-to-day management of the company. But if there is a need, funding you on the capital structure as well is something that we can do. I'll probably pause there.
Yeah, do you prefer, international hotel brands with franchises who has more distribution and marketing power into when you are looking at hotel projects?
There is a clear advantage, Ravi, in terms of what you want when you start up a hotel is you want your tourists to come in. What is key is that we get a diverse range of tourists in terms of whether they are the MICE range, whether they are the different types of tourists coming for different lengths of stay. So these international chains that have got captive clientele become a really attractive source for day one. But being Sri Lankan, working for a Sri Lankan bank, I would like to see a nice blend, a nice balance of Sri Lankan entrepreneurs venturing into the hotel sector. I would like to see some domestic international collaborations taking place, and I would also like to see some SMEs being able to do a little bit of hoteling in the outstations, and there where we sort of benefit is that they get into the mainstream. There is inclusivity there rather than private entrepreneurs doing a few rooms and getting about doing their business. That could be another reason for the low percentage of 4, because some of them are not even registered, and we probably lend to them as individual entrepreneurs, or we might have done it as a mortgage of a building, and it doesn't get classified typically as a tourist property.
One other change that we saw in the last budget is from one angle they're talking about bank consolidation, and another angle liberalizing of exchange control, where from November 10th, I think any company can borrow from foreign currency up to 40%, and also, as long as they have a hedging mechanism in place. So do you see other financing avenues coming up where hotels and hotel operators could establish from their capital as well as borrow from foreign sources through local relationships?
Yeah, certainly possible in terms of based on the budgets as well as what has been permitted. Firstly, even at present, you can borrow even from a domestic bank. You need to be prudent. You need to take a view in terms of what percentage of your revenues will be in foreign currency. So just let's assume that you are targeting a 80% revenue in foreign currency. So 80% of your loan can be in dollars or appropriate currency based on where you get your revenues from. And if you plan to cater to 20% the domestic market, Sri Lankans who come in, day travels or to stay in your hotel, then 20% of that loan component should be in rupees. Now that's possible even in through Sri Lankan banks like let's say HNB or any other bank. Now, in addition, they also can leverage their balance sheet by sourcing funds internationally. Increasingly, in addition to commercial banks, DFIs, development financial institutions, multilaterals have shown interest in coming in with long-term private equity structures and funding structures into tourism and other industries. And what is most attractive and what we have seen with some of the major promoters and some of the major operators is they have come in bringing the money from overseas, borrowed from overseas banks at extremely low rates. Now that has made the viability of the project that much more attractive. Paybacks like 8 to 10 years have suddenly scaled down to let's say 6 years or around, and that has made it very attractive because let's say today the prime lending rate in Sri Lanka is around 12%, but if you were to borrow in let's say dollars and it was ranging from 5 to 6, we have certain hotel funding structures here at at anything between 1.5% and 2.5% being funded from overseas banks, and that has made the NPVs of these projects that much more attractive and the paybacks that much shorter.
That's excellent. One other area, do you see our local banks playing a much bigger role going forward in financing the hotel industry, which is now expected to grow much faster, not only in the hotel side but also other activities like leisure parks and water parks and various other infrastructure which is required to attract more tourists to the country?
Coincidentally, yesterday I had a conversation on sports tourism. I had another conversation on health tourism. Some of our clients are converting their hotels into spas and health spas, etc. So there is a lot that is happening, and it is becoming more interesting in terms of the diversity within tourism itself. For banks, the attraction goes a little beyond just if we hesitated 10 years back, 15 years back because let's say it was just a term loan structure and nothing else to do. Today it is a different proposition, ladies and gentlemen, because you tend to bank the employees. You have your POS business, so there is ancillary business, there is forex business that comes with it, there is credit card business that comes with it, there is foreign exchange conversion that takes place, there is the supply chain that you activate with that. So there is a multitude in terms of wallet share, in terms of doing the entire, let's say, transaction. That makes it attractive to banks and other financial institutions. So the appetite to get into the tourism industry directly in funding hotels or in related activities, whether it's arts and crafts, whether it's the supply chain, has become a much more attractive proposition today? Yes, the short answer is we are more attracted to it today than before.
Thank you, Jonathan.